you wait for you
Wow,
say you
which
wait
kind
for
of
confirmation before you enter.
okay, okay.
Are you there?
Yeah, I'm hearing you, I'm hearing you.
Okay, you say you wait for confirmation before you enter. But most of the trade I watch you take most of the time. I don't think sometimes the commercial doesn't really play out before you enter the trade. So how do you confirm that that's a confirmation? Because sometimes I think your confirmation is supposed to be like an engulfing candle
Okay,
or an evening
okay,
star. But
okay,
sometimes maybe it just form those that doji stick, that hammerhead. You've already
okay,
entered the trade before
okay,
the
okay. Now,
confirmation.
okay. Let me explain something to you now. Let me explain something to you now. Now, you can even go as low as your 3 minutes, just look for confirmation, right? So now I have my order block entry. This trade, I didn't take this trade, right? I saw this trade, but I didn't take it. So now if I want to take a trade, what do I look for, right? Let's say, for instance, I had my point of interest here. So now this is my 3 minutes time frame. Okay, I can go lower to get a confirmation, 3 minutes, right? To get my confirmation. I don't go lower than 3 minutes, right? So now price put into my point of interest. So now what am I interested in? When you get your trade, you want to look for a confirmation. Now, you can have two types of confirmation. You can have what your bearish engulfing confirmation, which is when what you have seller pressure after the price taps your point of interest. Now, what do you have here? For me, I'm going to wait, right? I'm going to look for now. Let me explain something. Now, price tapped my entry, then gave us a little wick into the zone, right? So after price tapped my entry, you can see that there are some weak rejections here, right? So after we had a weak rejection, we had a pullback here, we had another pullback again, then we had what this bearish engulfing here that swept out this low here. So now you can see that we have two strong what bearish confirmations here. I have to look for what strong bearish confirmation for me to take a trade. Because why am I looking for confirmation? Because in some instances, now when trading on the lower time frame is very risky because of what you're going to have some trades that do like this, right? I don't know if you have seen any market scenario that you have your sweep, right? You have your break, you have your inducement. This is a high, this is your sweep, this is your break, this is your inducement right here, right? So price just does something like this. After sweeping your inducements, okay. So after price sweeps your inducements and starts selling, it just come like this, then boom, take out your stop loss. This happens a lot, this derivative market. It happens a lot on the derivative market. So now, why does it happen? Because market did not give a valid confirmation before that sale happened. This is just what they call it. What is the word to use? What is the word to use for this? So now, to avoid that, you always want to look for a confirmation, right? When trading on the lower time frame. I don't just set limits anyhow on trading on the lower time frame because derivative is full of what manipulations. Okay, so what you want to look for when price comes into your portfolio, you want to look for what bearish stick, strong bearish confirmations, right? Which you can go down to your lower time frame, which can be your 3 minutes. Look for that confirmation. Now look at here, we had this strong bullish. Look at now, these first candles here, they're not strong confirmations. Why? Because of we still have weak rejection. So now what does this weak rejection mean? It means that there are still buyers in the market. Okay, it shows that there are still buyers pushing the market up. So once price is doing something like this, I'm not going to enter the trade. What I'm going to wait for is I'm going to look for what after price pulls back again and gave me what this strong bullish bearish engulfing that even took out what this last low here. Look at this first bearish engulfing candle and the second bearish engulfing now. This is going to be my confirmation for a sell. Something I'm going to enter here after price has taken out this low, stop loss above this high, right? As you know, the protected high, then to sell down here. So most of my trades on the lower time frame, to be on the safe side, you always have to wait for confirmation. That which is what looking for what strong bearish confirmation, bearish engulfing candles, or two consecutive bearish candles. Now, once you see something like weak rejections, please don't enter that trade because of what you have. What buyers are still in the market. Okay, the only time you enter a trade is once you see what your bearish engulfing, which you can go down to your 3 minutes time frame to look at. Because on your 5 minutes time frame, you might not really see it quickly. But if you go down your lower time frame, which can be your 3 minutes time frame, you look for what? Look at this strong bearish confirmation that took out what this last low. Okay, look at this strong one. Or after price taps your PY and gives you a strong bullish confirmation, which your bearish confirmation, which can be a strong engulfing bearish engulfing candle, or two consecutive what bearish candles. Okay, then that's your confirmation for you. But once you price puts into your PY and you start having weak rejections, okay, which is what indecision. There's something I call indecision candle. Market doesn't know if to buy or sell. It's just playing around, giving you weak rejections here, weak here. Please, that market is going to manipulate. Okay, avoid those kind of trades. Okay, now let's go to the chart. Please, are you guys following, please? Are you guys following?
Yes.
Okay, now let's go to the chart and let me show you guys examples of how we trade this. So now, the first thing I said when trading on the lower time frame, first of all, identify what the first step is. What to identify the market trend. Okay, if you have a bullish current trend, which is what market making series of what higher highs, higher lows. Okay, sorry, market making series of what higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We have what a bullish market scenario. Okay, now you can identify that by just using your trend line. You can see that we're in a bullish market. Now, in a bullish market, you don't want to be looking for sell SBI, you want to be looking for buy SBIs in a bullish market. So now, once you identify the trend of the market, you want to look for the structure you trade. And the structure that we trade is what? The sweep, the break, and the inducement. Okay, we have a sweep of this low, we have a break of market structure. What do we have here? We have what? A type 1 setup. Remember I said we have what? Two types. We have the type 1 and the type 2 setup. Okay, first thing first, identify the market structure. Okay, identify the market structure of the current trend. For V10S on the lower time frame, I was able to identify that what this was a current bearish market, right? Why is it a current bearish market? Because market was making series of what? Lower lows, lower lows, lower highs, lower lows, lower highs. Before we're making series of what? Higher highs, higher lows. Remember, before we're making series of what? Higher highs, higher lows. But now market has changed from its bearish bullish market structure to a bearish market structure, right? On the lower time frame, we have market making series of what? Lower lows, lower highs, lower lows, lower highs. So this is a bearish market. So after you identify the current trend of the market, you want to look for the structure which you trade. And the structure which you trade is what? The sweep, the break, and the inducement. Not only identifying the structure, you have to add other confluences as well to make sure that you have a solid trade. The second confluence after identifying the market structure is using your Fibonacci to validate your structural liquidity. Remember I said always make sure you add your confluences to have a solid trade. Okay, now you take your Fibonacci, this thing from the high to the break of structure. This is the point which market broke structure here. Okay, right? We have what? The break of structure here. You can see that what? The structural liquidity which you have here is above the 0.5 or the 50% of the Fibonacci. We have a type 2 structure here. Okay, now this is a valid structure, right? So now after that is identified, we have two confluences. First confluence is that we have identified the trend of the market, which is what? We have a bearish market. Second confluence is that we have what? The Fibonacci above the 50% of the trade. Now the last confluence is what? Wait for a confirmation. And the confirmation is what? You want to look for what? Your bearish engulfing, strong bearish engulfing. You can see that what? Once price pulls into this range, we're having weak rejections here. Okay, so this kind of trade, I'm going to wait, right? I'm not going to take a trade, right? But you can see what happened after price pullback again. We had what? A strong bearish confirmation, which still took out this low again. Market still took out this low with a strong bearish entry. Then I'm going to take my sell entry at this point, right? Stop loss above this high. Remember, you can put your take profits at what? The external liquidity. Okay, remember the market moves from what? IRL to ERL, which means the market is going to take out this low. Boom, here. So now let me show you guys more examples as well. Let's go to step. Let's go to step index. Let's see. Right, so the reason why you should look for confirmation all the time is because of what? This derivative market is full of manipulation. There's a lot of manipulation in this market. So always have patience. Follow the rules, stick to the rules, which is first of all identifying the trend of the market, the structure which you trade, which is basically what? The sweep, the break, and inducement. You validate what? Your structural liquidity, which is what? For a sell market, for a sell market, your Fibonacci what? Has to be what? Above the 0.5. For a buy market, your Fibonacci what? Has to be what? Below the 0.5 level. Okay. Now let me show you guys another example again. So when you get to the market, you just have to calm down. You know, just calm down and do the right thing. Okay, just calm down. Don't rush.
Please, let's analyze V25.
V25. Okay, let's see V25. Let's see V25. Okay. Now look at what I'm talking about. Look at this now. We have a bearish market scenario, but can you see that right now there was no confirmation for this trade. No confirmation what? No entry. Okay. This is why I said always wait for confirmation. Setting limits. Now let me explain something to you now. Remember that we're not trading A plus setups. Now, remember what I said about A plus setup? A plus setups are those setups that have what? A bias. Now, a bias can be trading a setup in another setup, right? Which means, for instance, now, what you call an A plus, let me switch this now. I'm going to come back to this trade. But now, what you call an A plus setup is a setup that you have established what? Your SBI on the higher time frame, right? Which can basically be what? Your daily time frame, your 4-hour time frame, your 1-hour time frame, your 30 minutes time frame. But it's basically what? An SBI established on the higher time frame, which you're going to look for what? A confirmation inside that range. So now, let's say, for instance, you have a higher time frame SBI, okay? Right? So now, price takes out this high on the higher time frame. So now, let's say this is your 1 hour, or let's say this is your 4 hour, for instance, right? You have your SBI on the higher time frame. So price takes out your structural liquidity, and starts selling. Okay. Now, on the lower time frame, you're going to look for what? SBI is on the lower time frame in that range to take out what? This low on the higher time frame. So now these kind of setups, these are the kind of setups that you can use what? You can use limit orders to take this kind of setups, right? You can use limit orders to take this kind of setup because of what? These are A plus entries. A plus entries always smash take profits. Now, let's say 80 to 90% of the time, okay? They are always win trades for A plus setups. But now, for instance, you are not taking A plus setup, you are taking a B plus setup, which I'm explaining right now. These B plus setups are setups that are taken based on the market trend, okay, on the lower time frame. Now, look at something like this now. You have what? The lower time frame, we have what? A bearish market. So this is why I said it's very risky to set limit orders, right? On taking 5 minutes B plus setup or taking setup based on trend. Now, you have a lower time frame. Remember what I explained, market making issues of what? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Look at what we have here. We have a sweep of this high, right? Price swept this high, broke market structure. Then we have a type 2 setup here. Can you see that's what? First of all, we have a protected high here. Can you see that after price gave us our sweep and our break and reducement, this is our order block here. Can you see that market did not give us any sell confirmation here, right? First of all, the first things first, there was no sell confirmation. Once price put back into, there's no sell confirmation. Remember what I said about a sell confirmation? You want to look for what? Your bearish engulfing or two bearish candles